Welcome to the Business 7 Show, Namibia's primary economic analysis program. My name is Zohane Klache, and we bring you in-depth news covering the main aspects of Namibia's economy, plus interviews.
This event is being live streamed. Welcome to this public discussion hosted by the Economic Association of Namibia. I'm Rochelle Locke and your program director for this evening, and it is my pleasure to welcome you to this very important public discussion ahead of the tabling of the 2026 national budget. This evening's theme, the national budget at a pivotal moment, choices, trade-offs and economic direction, is both timely and necessary. Budgets are often discussed in numbers, but budgets are far more than just numbers. They are signals, they are priorities, they are reflections of constraint, and they are declarations of direction. Tonight we gather not to simply anticipate allocations, but to interrogate economic trajectory. We meet just ahead of the tabling of the appropriation bill, and in moments such as these, dialogue matters. Serious nations debate their choices. Serious institutions test their assumptions. Serious stakeholders engage constructively, and that is precisely why we are here this evening. So once again, thank you so much for taking the time out on behalf of the EAN. Welcome, and we trust that you will enjoy the next 2 hours with us. To officially welcome us and set the institutional context for this discussion, it is now my pleasure to invite the Chief Executive Officer of the Economic Association of Namibia. Let's please give a warm applause to Mr. Hanns Karamata. Mr. Karamata, the floor is yours.
Thank you, Roche. Well, good evening, everyone, and once again, welcome to our public discussion tonight. Our theme, as Roche pointed out, is on the upcoming national budget. And we have lined up an exciting program. We have an excellent speaker to lead us, and we have some great panelists to lead the conversation tonight. So I do believe that we will have a great discussion. Let me acknowledge the presence of EAN board members who are present here, and to all the invited guests, a very warm welcome to you all. Ladies and gentlemen, the topic of the national budget is a critical topic. The national budget is a central tool by government to allocate resources. It is a tool to steer the economy, to stimulate growth, and to stimulate job creation. So it is a tool that affects livelihoods, it affects business growth, and it affects really the direction of the overall economy. So it's a critical topic. Now we also know that this is the second budget of the new administration, and the new administration has set very clear development targets. And we know that the government at present is experiencing much tighter fiscal space. And within that context, the question is, what will the minister do? What can we expect from her in this budget? Will she table an expansionary budget to cater for the development targets? Or will we see more of this smart spending approach, where she basically spend less on lower priority areas and spend more on areas that has great potential to drive those development targets and to drive social outcomes? What can we expect from her? I know that Mr. Hayes has very strong opinions about this, and we will hear from him. Some of the topics that we can expect tonight, I think one of the key topics is the low execution rate of the development budget. We have raised this issue in the past. It's an issue of concern. Why? Because the development budget is exactly where government has greater leverage to steer the economy, to stimulate growth and to stimulate job creation. So when we see capital projects that are not completed or not implemented at all, and then we see funds being reallocated to the operational budget, that is a cause of concern. So perhaps the question is, what will the minister do with regard to that challenge? Can we expect from her to introduce some measures that will improve, that will speed up public procurement? Because that is one of the reasons, one of the factors that slow project implementation. What can we expect from her? Last year she spoke about the MAP's recommendations. Will we see any of those recommendations in her current budget to deal with the bottlenecks in the public procurement system and speed up those processes? I think that's a topic that we can expect tonight to be discussed. Free education will be also a huge topic tonight. We have seen how at the beginning of this year that government has rolled out free education at tertiary level. There was a measure of success, but also there were challenges. We saw that government had to sort of go back on some of the promises because fiscal realities just did not allow government to have the full package as promised before. The Youth Development Fund was launched last year, a really critical tool for youth employment, a critical tool for enterprise development. What will we see in this budget? Will we see the experiences from last year? Will we see any of those lessons taken on board in terms of key learnings that will help to improve that product offering? Very, very key for youth employment. Ladies and gentlemen, these are just a teaser of the type of topics that we can expect tonight. The experts are there to lead us in this conversation. I want to encourage you to participate actively in this discussion tonight. I think that together we have the opportunity to contribute to the national conversation on the budget, and I think that together we can actually impact the direction of fiscal policy in our country. So with those few words, ladies and gentlemen, let me wish us all a great evening. Let me wish us some fruitful discussions tonight. I thank you.
Thank you so much, Mr. Karamata, once again for grounding us in the importance of constructive fiscal engagement. Apologies, ladies and gentlemen, we were just trying to sort out a few logistics. I believe that some of us had a bit of a challenge entering the parking at the basement. Do not fear. Please do, at the end of our session, you're welcome to get your validation ticket at reception. I believe that security has a record of the various vehicle registration numbers. So you can just get that then from reception. And again, on behalf of the hotel, we apologize for the inconvenience. At this juncture, we would like to acknowledge our sponsors who has made this public discussion possible. Let's acknowledge, of course, the Economic Association of Namibia, the Capricorn Group, the Hanns Seidel Foundation, as well as Network Media Hub, or NMH in short. Let's give them a round of applause. Then, ladies and gentlemen, you have seen that there is a feedback form on your seat. You are kindly requested to complete the form during the course of the discussion or during the course of this evening, as that will aid the EAN to improve going forward. Now we move on to the analytical foundation for this evening. Now, before we debate trade-offs, we must understand context. Before we discuss direction, we must understand data. And it is therefore my pleasure to welcome and invite Mr. Salamo Hay, the Managing Director of High Economic Intelligence and Associate Member of EAN. Mr. Hay will present his economic assessment ahead of the national budget. So, Salamo, we look forward to your valuable insights. Let's please give him a round of applause.
Good evening. Thank you, Roche, for those kind words. Cons, I don't have strong opinions. I just present the data, and then you make meaning of it. But nevertheless, thank you so much. I think from our side, as High Economic Intelligence, we are quite pleased to have seen how this event has grown over the years. I think every year our subscription is quite high, and it gets sold very quickly. Now, I think the reason that we embarked on this particular journey was because you don't want to speak about the budget afterwards. Because when you speak about the budget afterwards, it means that you are essentially reciting what the minister spoke about. The idea to do this before is really to sort of encourage debate, get everyone thinking, and perhaps the minister still have time before she presents the budget to slip in or one or the other thing. So our presentation today will focus on the global economic outlook in terms of what does the world look like under the Trump presidency, what does the world look like regionally on the continent, and our domestic outlook. We look at the historical trends of the journey the budget has taken from the two previous ministers of finance, Honorable Sarah Kungula Madila, what she did, Honorable Kale Schleuten, and then recently Honorable Ipumbu Shimi. Now, out of that discussion, we'll then come to what are the choices that has been made over the years during these budget cycles in terms of what did the different administrations propose in the budget, and has that changed over the years in relation to the new administration that's coming in now? Are we seeing a change in terms of the economic narrative? Are we picking up any change in terms of the preliminary numbers that we have? And that will then inform what direction the budget could go. Is it next week? Is it the 17th? Sorry, when is it? The 20th? 25. And then we'll conclude with a few remarks. So, ladies and gentlemen, in terms of what are the current risks that the world is facing in relation to where we are today? There's a lot of geopolitical tension that's currently keeping us on the edge. The Russia-Ukraine confrontation has been there, and we are looking at this in cycles of 2 years, which is the short term, and then we're looking at it a bit of a longer term horizon, which is the 10-year cycle. So what happened in Venezuela, what's happening in Ukraine, Russia, Iran, the Middle East, is definitely a concern for global economic growth going forward. Misinformation in terms of social media, who says what is factual, what is not, definitely undermines credibility, which then leads to undermining growth projections. There's a lot of polarization. The us and them It's a big concern for multilateralism and the global trade and where we want to take the world. If you look at the short term, you realize that the extreme weather conditions is not as prevalent as it is in the next 10 years because it has been overtaken by the new risk factors. State-based armed conflict, we've spoken about this, cybersecurity, inequality will be with us for a while because the gap between the rich and the poor is growing by the day. It's a risk in the short term, it's a risk in the long term. We see it on a daily basis in Namibia. Erosion of human rights and civic freedoms, again, we've seen the NGOs closing down when funding was curtailed. Pollution, we've spoken about that, and then obviously the involuntary migration or displacement of people. Go back to your countries, what are you doing here, and. In terms of the long term, extreme weather events will be with us. Misinformation, we've spoken about that. Cybersecurity. We hope that in the longer term, the geopolitical tensions would have cooled and we would not be having conversations around war. What does that mean for growth globally? What we do know now is that global economic growth is in the main being driven by the emerging markets and sub-Saharan Africa. The potential inherent in sub-Saharan Africa is massive, but the reality is, are we going to derive the dividend on this potential, or will it always remain potential? Again, we're growing back to the pre-COVID years, and that growth is essentially being driven by the emerging markets, developing economies, and sub-Saharan Africa. The advanced economies have a post-industrialization. What that means is that their growth potential on the upside is curtailed. So that's why the developed and the emerging markets will drive growth in both the short and long term. It's important to understand where Namibia finds itself in terms of the growth trajectory, more so in relation to the growth anchors that we have identified, which essentially is sub-Saharan Africa. Our growth has always been linked to the South African economy, and that's why it's important to understand how our growth has trailed South African growth over the years until recent times. Early 2000, late 2006, see that Namibia outstripped both sub-Saharan growth and South Africa. The reality is that we don't have a growth problem. Our economy is always growing. Our economy has grown over the years. The reality is that our growth is not inclusive. And what you see with this trend is exactly that. Sub-Saharan Africa has grown. Even if you look at the deepest contraction that we had on the continent and in Namibia in relation to the global average or the advanced economies, their contraction were much deeper than ours. So it's important that this growth become inclusive, becomes bigger, it starts taking into account the greater participation of the populace. Populace meaning the population. You cannot have the majority outside of the growth metrics. Again, one of my favorite graphs, Namibian economy has not changed over the years. It looks exactly the same it looked in 1980s. A very big tertiary sector. The primary sector was much bigger in the early 1980s. And I anticipate that to become bigger again because of gold coming back, uranium, and then the commodities that has come back in a strong way. But the reality is that if you're going to create jobs in this economy, the structure needs to change. You need to get a bigger secondary sector because secondary sector is where value addition takes place and this is where the jobs are being created. And currently, that's not the case. So inequality will remain a problem, and that will erode the growth potential that we have spoken about earlier. So in one way or the other, for us to get to the inclusive growth we want to see, the structure of the Namibian economy has to change. We'll see whether the budget will speak to this. In terms of our growth rate, again, indicates that we do not have a growth problem. Over the years, we have grown quite well. Growth cycles are linked to administrations. Administrations are linked to the presidents. We've grown quite well during the early good years. One contraction during President Nyoma's time, very modest one. And I think during that period, we were just coming out of a very small economy, which then became big because of the huge employment in the public sector, which is why you see that 8.2, 7.2 growth rates during those years. The commodity boom of 2004, just pre the financial crisis during the President Pohamba's time, was good years for us, a mineral endowed country. And then obviously during President Geingob's time was COVID, and then we had that period of no growth during the drought years. President Bumba came back. We had a rebound through after the COVID years, and we started growing. And our current president, Her Excellency Dr. Netumbo Nandi-Ndaitwah, have seen a modest growth as well. It's important to link presidents to growth because growth is informed by economic policy. Economic policy is informed by the political administration. So again, we have grown well over the years. In 35 years of our existence as a country, we only had 4 contractions. In 35 years. Of 2 of those years was during COVID. So essentially, we have not grown for only 2 years. In the rest of our lives, as an economy, we have grown. But we've got this huge inequality, huge unemployment, which means that growth is not inclusive. Takes us to this big problem that we have, a time bomb, in my view. Around almost 75% of the working population, or that particular age group that we sampled coming out of the the census labor report, 75 is a massive number of unemployment. So again, remember the slide around transformation of the structure of the economy, the growth that we have enjoyed under the different administrations, and this big time bomb that we are sitting with. It has to change, and at some point, tough decision, transformation, and policy certainty has to come. What does the budget trends look like? We're looking at these numbers recently, I think, and our taxpayers has actually increased in terms of number of taxpayers, and we got this from NAMRA's portal. Just about 1.1 million people are registered for tax. Active taxpayers, perhaps why this number is smaller than the other is because those are outside of the threshold, and then those that are registered on the portal. Give or take, I think we're just sitting above, is it 600, the number of social grant recipients. How much is it, Lennon? 602,000. 600,000 plus people that are currently recipients of grants. What does that mean? It means that you don't want your economy to have more people on welfare as opposed to those paying tax. Regrettably, this is what you have in Big Brother South Africa. You've got more people receiving grants as opposed to those paying tax. We've seen an increase in our numbers, and may this long continue. I think this number has changed from when we did it. I saw a report today from NAMRA that they have collected 70 billion. When we surveyed, it was around 61. So we anticipate that they might still be below target as part of what was projected and coming in. So we anticipate a decrease in general revenue for this year, which again speaks to Conce's point about the fiscus and fiscal realities from the objectives that we have around perhaps what was pronounced, free education, and what the reality looks like. Again, the decrease in revenue must be understood in context, not to say you've got an increase in the number of taxpayers, then why is the revenue declining? NAMRA has given an explanation for this. They said that they paid a huge number of refunds to businesses, which is a good thing because one assumes that that get reinvested back in the businesses. But for intents and purposes and budget projections, we anticipate a decline in our revenue base for this past financial year. Non-tax revenue has come back stronger. Can I go back? Non-tax revenue has come back, which essentially is a dividend from SOEs. You've seen quite a SOEs being turned around. We're reading the issues around MITCO. Remember, I think the last policy tax breaks or tax liabilities that were given by Honorable Ipumbu was for what those SOEs owed as tax liabilities were written off. And we hope now that they are cash positive, that their position financially has improved. They start paying their tax as well, so that that revenue picture keeps improving. What does the debt to GDP look like over the years in the different administrations? Now, again, I always make the point that it's not so much always about the size of the debt. It's really about the direction of the debt. Where's the debt moving towards? Is the debt moving towards the productive side of the economy, or is it moving towards what perhaps termed wasteful expenditure? Because if it's moving towards wasteful expenditure, it means that we will not be able to pay back the debt productively. We'll struggle paying back the debt, and the debt will remain higher for longer. We enjoyed a budget surplus, and I don't say that we had inclusive growth under Honorable Sarah Kugongelwa, but it was part of the narrative. The budget statement spoke about inclusive growth. And we had fiscal discipline, or that was the term being used during that particular period. Honorable Carl Sloiten came in. He spoke about pro-poor, pro-growth. There were the guarantees that were earmarked for Kudu gas. How many years later? That hasn't come to nothing yet. National storage facility. Also, you know what happened there. And this is really when debt started ramming up, was during this period. I'm not saying it was because of Honorable Kale. All I'm saying is that during that period. And now once debt has gone up, and you don't use this debt towards the productive side of the economy, debt tends to stay high for long. And this is essentially what happened. Obviously, during Honorable Ipumbu's time, spoke about fiscal consolidation because of this high debt that we had now that had to be consolidated. The metrics were simply not making sense anymore. It was difficult to manage the fiscus. It was the legacy of the tax liabilities. Remember this period where MIDCO, RCC, and a few other SOEs were given tax breaks. They had no obligation to pay what they owed NAMRA. We hope that will become the new strategy around the non-tax revenue that we have seen increase, and the state-owned enterprises start paying dividends into the state coffers. The reality is this is where we are standing today, and one needs to understand whether there is scope to further take our debt. I won't speak about the redemption of the Eurobond. I'll leave it to Helena and Josiah to speak to that. But the reality is, obviously, there has been certain benefits because this one is within the local currency denominated debt as opposed to the volatility that one sometimes have with foreign debt. What has been the policies, what has been the pronouncements that has been made in the short term, in the last year or two? An important one for you to note there is really to understand that corporate tax is coming down. Another reduction will come into this new financial year, which augurs well for business. That special economic zone, the 20% corporate tax rate, we are looking forward to that. The dedicated tax court, there's so many unhappy SMEs because you sleep tonight, tomorrow you wake up, NAMRA has taken money out of your account. Some of this need to be understood, and maybe it will be solved through that. So there's been quite a few movements. There's been the tax bracket adjustment postponed to save some money for people, more disposable income in their pockets, and all of that. So there has been movements to try and really fast track and trigger growth in the economy. So what was the budget highlights of the new administration when they came in? Honorable Madam Erika Shafuda spoke about economic development. Please don't lose your thoughts on the previous ministers, what they spoke about. Pro-poor, pro-growth, inclusive growth, economic development. Social protection, pro-poor. Youth empowerment, food security. Where has the sense gone to over the years? The sense have gone to education, colleagues, to the social cluster. Have we gotten the outcome or the return on this investment in education? We are creating this huge unemployment problem, and this unemployment problem is going beyond the unskilled. We are creating graduates that are now unskilled. But we're spending so much money on education. We need to demand a return on the investment. Even if you're spending money on salaries, which is the operational budget, there must be a return on that investment on the teacher. You cannot have students unable to get through grade 12 to pass basic literacy around mathematics to get into a university, colleagues. Because what will that person go and study? At the end of the day, the very same person graduates. Because we've got a lot of these new high institutions of learning mushrooming everywhere. And what that means is that the benchmark for the pass rate get tampered with. So you cannot throw money at a problem hoping you solve it. So again, we have seen this huge allocation move towards education over the years. We have seen the narrative around pro-poor, pro-growth, inclusive, yet it does not come to that. Which takes us to the elephant in the room, the Petroleum Amendment Bill. Colleagues, the oil and gas is not a new mineral that we are discovering. We had discovered other commodities and we have not covered ourselves in glory. We must try and use this as an opportunity to deal with our issues of high unemployment, high inequality, exclusive growth that we have, to try and bring it into inclusive growth. There's some very good examples globally around the sector. There are also not so good examples around the sector as well. Norway is an example that we perhaps should explore, and how they have over the years taken over their industry. When I say taken over their industry, it's understanding their asset base within the oil sector. There are others whose names I will not mention who are not so good examples. The Investment and Promotion and Facilitation Bill, colleagues, again here, investors want certainty. That's all what investors want. Investors don't want to remain mid-air. They're either lending or they're taking off. We can kick and scream about the visa regime. The reality is that once a tourist wants to come to Namibia, he understands what the regime is around visa. They'll make a decision to come or they'll make a decision not to come. That's exactly with investors as well. Investors want to know what are they signing up for. Very similar to yourselves. If you have money in the bank, you want to know that tomorrow morning when you wake up, that money is still there. And that's exactly what investors want. They want to know what are they signing up for. In the absence of gray areas, the FID will not come. So that's why it's important that the budget speak to policy certainty around these very important regulatory documents. We hope that Honorable Madam Shafuta give us certainty on this, whether it's coming in its current form or when it's coming. Now we move to the choices and the trade-offs. Over the years, we had different policy documents, we had different development economic policies. There was HPP1, HPP2, there was, and I'm just restricting our conversation to HPP1, HPP2, NDP5, and NDP6. Now, if you look at effective governance, it's a pillar in HPP1. This particular pillar, find it in HPP2, you find it in NDP5, you find it in NDP6. Effective governance led to the establishment of the Public Enterprise Ministry. The Public Enterprise Ministry doesn't exist anymore. It was part of SOE reforms, it was part of effective governance. And all of these policies, development plans, have got them there. Are these choices, are these trade-offs, or what is it that we are doing? Economic advancement, macroeconomic stability, which we have enjoyed over the years, economic transformation is there. Youth Enterprise Development, Con spoke about the Youth Fund. So all of this has been there. And you can go through all of them. Next one, HPP 2. Again, effective governance, accountability, transparency. You had a situation where board members or potential board members had a database. Through that, they would then be selected because they had a certain skill set that becomes part of the SOE reforms. Where's that process today? So effective governance does not start and end with closing down an SOE or starting a new SOE. Effective governance means governing that SOE to the mandate it was established for. So the reality is that our development plans has not changed. Our development plans have essentially just changed one or two words in the pillars. Are we pouring in the same old water into new bottles? Now let's compare them, colleagues. Effective governance is there in HPP 1 and 2. NDP 5, it was called good governance. NDP 6, effective governance and public service delivery. HPP 2.1, we have what we termed as economic advancement. NDP 5 spoke about economic progression, from economic advancement to economic progression. And then economic growth in NDP 6, transformation and resilience. HPP 2 spoke about social progression as a pillar. NDP 5 speaks about social transformation, which is human development and community resilience. Doesn't this read similar, colleagues? So the reality is that the development plans over the years read exactly the same. We tweak it here, we tweak it there, but the challenges has not changed. Inequality has not changed. We have not transformed the economy. The structure has not changed. We still have way too many people outside of the economic metric. Our secondary sector is still very small. We're simply not creating enough jobs. We're still giving a lot of money to education without outcomes. Rocher, I don't know how much time I have left. So as we move on, we're going to quickly go through the SWAPO Manifesto Implementation Plan. Because remember that the reality is you've got party policy that essentially then inform our government. So agriculture, again, was a big part, has always been a big part of the economy. The green schemes was agriculture. They have not been successful with the green schemes. Again, there was no demand on that investment from a return perspective. We're talking of developing 130,000 hectares of large-scale farms. We have resettlement farms, right, that are currently unproductive. Should we then move towards acquiring more farms, or rather get these ones productive? Sports, I'm conflicted here, but definitely an area of interest. We hope that not everyone will one day go to a university, have a degree, but one of us or one of them, of those young, highly talented young people can become a new Frankie Friedrichs, Peter Shalulile. We must try and create an avenue for young people through that. We have seen how Brazil has changed from being a developing third world country into a fully fledged emerging economy through remittances. Remittances was exporting sports people into Europe They remit foreign currency into the balance sheet of their country, and through that, the country built up foreign reserve, and it's able to move the needle. They then start building the cacao industry, and the multiplier effect on the other industries are then built out of that. So we have seen that it can be explored. Youth empowerment, we're happy to learn now that the youth fund is revolving. It's not linked to timelines, which is good. And quality education, I think Cons has spoken about the issues around free education and how we quickly learn what is possible and what is not. Creative industry, an important one, but must be understood in the context of what is available and what can be done with the envelope. So having looked at the choices, having looked at the trade-offs, what is the economic direction that we are taking with the budget that's coming, given what was said during the mid-term or mid-year review? We have seen that growth has been revised downwards. Manufacturing, which again is the productive capacity, completely falling away. We have to build that. We have to make sure that special economic zones come on stream quickly as possible, because otherwise the growth expectations will not all go well. The fiscal envelope remain fixed due to the problems that we have. Development budget, the non-execution of it, means that you cannot ask for more money. Means if you get 12 billion for your development budget and you spend 7 billion of that, there's absolutely no incentive to expand or to increase the development budget. And that remains a challenge. Whether projects get approved without feasibility and then they take too long for execution, or the budget cycle or the budget process is too short for the relevant ministries to be able to have their projects in line with the financial year. Because at the end of the day, you want to make sure that your development budget is executed. Because when your development budget is executed, the likelihood of more people being employed, even at the short term, is higher. To build competitiveness and efficiencies is higher. And that's why it's critical that we look at mechanisms of how we can accelerate the execution of the development budget. We have seen that the non-tax revenue has increased substantially. Dividends have been paid back because some of the SOEs has turned around their operations, which is commendable. So our understanding, given this, is that there might be no expansion. Sorry, Cons. It will be reprioritization within the constraints. Again, debt servicing cost is remaining higher for longer. We want to bring this down quicker so that we can start spending in the right areas as opposed to just paying back debt. So I think there will be some level of balancing around the policy direction in terms of what the manifesto said and essentially what the reality looks like. What are the new directions that perhaps we could see in the budget? We're going to perhaps see a greater emphasis on SOE-led growth because MIDCO is coming back. The zero tariff that we got now from China, again, there's an issue of throughput, but the reality is that there could potentially be work. The corporate tax that has come down, private sector will definitely have to come to the party because it's an opportunity for them to invest and grow further. We want to see that policy certainty so that private sector and investment can know what they are signing up for, and through that, you will most probably see a diversification of the economy. So we might not see the expansionary budget now. In my view, I would be surprised if it comes. But I think that there are certain nuggets that we can pick up that could potentially start moving the economy in the direction that we want. Those special economic zones, the corporate tax coming down, we should exploit that. The availability of pension money, Josiah will speak to this, trying to make sure that pension fund money can be channeled in the right area for investment and in some instances, even risk capital. And essentially, this is where it leads us to. Is Namibia ready to accelerate transformation with policy certainty? Ladies and gentlemen, thank you so much.
Thank you, Salomo, for that comprehensive and thought-provoking presentation. You have laid before us both opportunity and tension, and perhaps also reminded us that optimism must be supported by discipline. Ladies and gentlemen, we meet tonight at a defining fiscal moment, not because budgets are unusual, not because economic debate is new, but because the margin for error is narrowing. Across the world, economies are recalibrating. Growth is uneven. Capital is cautious. Citizens are impatient. And governments everywhere are being forced to answer difficult questions about sustainability, competitiveness, and credibility. Namibia is no exception. We face a constrained fiscal environment. We face rising expectations. We face structural bottlenecks that have persisted longer than they should have, as we have rightly heard there during the presentation. And yet we also possess strong institutions, deep domestic savings, resilient sectors, and a generation that is ambitious and capable. The question before us is not whether we have potential. The question is whether our fiscal choices will unlock it or postpone it. Because budgets are not technical documents. They are moral documents. They signal what a country values. They determine what a country is willing to sacrifice. Every allocation tells a story. Every trade-off carries consequence. As we've heard earlier from the CEO in its recent submission to the Ministry of Finance, the Economic Association of Namibia emphasized several key areas requiring attention, including development budget execution, SME capital mobilization, procurement reform, PPP capacity, education outcomes, fiscal sustainability, and industrialization. These are not abstract concepts. They affect jobs, they affect households, they affect investment, they affect confidence. So tonight is not about criticism for its own sake. It is about clarity, clarity on what must change, clarity on what must be prioritized, and clarity on the economic direction we choose. Because in moments like these, neutrality is not an option. Direction will be chosen, either deliberately or by default. Tonight, we unpack these issues with a distinguished panel representing economic intelligence, banking, asset management, and policy leadership. Allow me to introduce our panel to you. And as I introduce our panel, I would ask them to please join me on stage. Salomo Hay, Managing Director of High Economic Intelligence and Associate Member of EAN, bringing macroeconomic insight and fiscal analysis. We are pleased to have with us Ms. Helena Mboti, Group Economist at Standard Bank Namibia, offering a financial sector and market-based perspective. Please welcome Josiah Hano Oshike, Vice Chairperson of EAN, representing policy engagement and economic research. And Floris Berg, Chief Economist at Capricorn Asset Management, providing capital markets and investor perspectives. Ladies and gentlemen, please join me in warmly welcoming our panel. Can everybody hear me? Okay, there we go. Thank you, Floris. So to our panel, I think I'm going to start off with a framing question to each of our panelists. If you had to identify the single most critical trade-off facing the Minister of Finance in this upcoming budget, what would it be and why? I think, Helena, can we start with you?
Thank you. Testing.
You just have to
Thank you, Rishay, for that question, and thank you, everybody, for taking the time to be with us for this discussion. I think for me, as Salomo rightfully pointed out, the challenge that we're having is the fact that the fiscal space is very tight, but we have to spend because the opportunity cost of not spending at this time could be greater. And I think it's very important that the government looks at the return on investment in every single dollar that they're spending in this next budget. So for me, I think the most critical trade-off in this budget is how do we manage expenditure to be able to, or how does the Minister of Finance, let me put it this way, how does the Minister of Finance use all the levers that she has, that being direct expenditure, but also policy and regulation, et cetera, across the entire banking and non-banking financial system to actually achieve the goals that have been lagging for the last 20 plus years in order for us to ensure that we're not just spending for comfort and to kick the can down the road, but spending so that in 10 years' time, we're actually able to achieve lasting growth. So I think in that, the key things would obviously be your education, but not only education, working on creating an entrepreneurial mindset so that we can create more jobs. Right now, I've noticed that what the Minister of Finance is doing or has done in the previous budget is focusing a lot of youth unemployment, but thinking more in terms of just giving people initial experiences with internships and etc. But the country needs more CEOs and not more interns, because one CEO can create a lot of permanent jobs. So I think ensuring that the minister is able to do that without directly using or directly straining the fiscal budget would be the key for this budget for me.
Josiah, can I move over to you?
Yeah.
Just on the side.
Yeah.
On the side.
On the side top.
Okay, here we go. Yeah, I think from my perspective is really the balance between how much do you spend on your capital budget and how much you spend obviously on human resources, which is very static, right? So now you have this static human resource budget, which is growing every year. Unfortunately, the government has been using, employment through government or public service to kind of try to alleviate unemployment in the country. I mean, if you look at it, Namibia is one of the probably the highest civil servant to non-civil servant employment ratios globally, and obviously it's because we just haven't gotten it right. How do we get employment right in Namibia? And something I think even private sector many times is not getting right. So that's just the balance to say, okay, are we going to employ more people? Are we going to give more money to basically capital projects to grow the economy? But even with capital projects, we've heard that implementation is very, very poor. All right, so then you actually give a lot of budget to capital projects. Implementation doesn't get done. Obviously, the money or the budget returns to treasury. So that, to me, that is one of the biggest kind of trade-offs the government will have to make. Okay, make sure that we have enough money in capital projects, but make sure that at the same time you are able to meet your civil service budget, and obviously knowing that we are probably going to get more soldiers next year and more police people next year, because it seems like it's a recurring kind of recruitment process that's going on, as well as more teachers. I'm assuming more nurses and doctors, and so it goes. So I don't, as much as the government is saying they are freezing employment, those 4 areas I mentioned now, seems like every year is going up, and it means that more money needs to get spent in those particular budget items.
Floris, please share with us your views.
Ek dan net sien of ek aanstaan sê. Roche, yes, I just want to, if I may, firstly just drop a word of caution perhaps, or perspective to say that yes, we're discussing fiscal policy and developmental policy and what the government does and don't do and all that, but we must be careful not to be overly dependent on what government does. It is important, like Salomo pointed out, the importance of policy and the administrations and the philosophies, etc. However, well, most of us in the private sector, so we need to set our sails to whatever way the wind blows. And I think perhaps there's a sense that's gotten hold of society in general, that the government must do everything to right the ship, so to speak, with all of these unemployment numbers, etc., etc. Now, what Solomon said is the important thing is to have certainty with regards to policy, but I also think more than certainty, you need to have good policy first, and then certainty. You can have a bad policy and that also brings certainty, but that means nothing happens. Yes, so back to the trade-off. From my point of view, and from where I work and sit, is we approach the budget largely from a overall macroeconomic perspective. So what matters first of all are the big numbers, the headline numbers, and what we have had over the last fiscal year. We really had a very tight situation in the capital markets with respect to government finances, and specifically with respect to the deficit and what was needed to fund the deficit as well as the maturities. So last year was the fiscal year now ending, actually now in March 26 is the end of the fiscal year, was the biggest borrowing requirement ever in the market. So that is one of the key things for me then in terms of a trade-off, is we have to get a trade-off between fiscal sustainability, or fiscal health, and big promises, big plans, big spending plans. That sounds very good, and yes, we need to spend and all that, but we also need to have, in terms of the trade-off, I think what I would like to hear from the minister and the administration in general is a very, very keen awareness of the resources that are available. If you think about our economy is about 300 billion, more or less, in size. The government revenue is roughly 90 billion. The spending side for this year is around about 105 billion. So we normally have a deficit of about 15 billion. And last year that was about the deficit, but then with the maturities, we needed to borrow about 25 odd billion. So the market, so to speak, is not an amorphous entity out there. The market consists of you and me. Your funds, my funds, your savings, our savings, the bank's assets, which are your deposits. Well, your deposit is actually the bank's liabilities, let me correct me there. But the banks also fund the government, the deficit. No, it's not a bad thing to have a deficit. A deficit establishes the cost of capital in the economy as a whole, because the government borrows at certain rates, right? And that establishes like an interest rate structure in the market, where the rest of the economy then needs to compete with. Because if you want to lend money, you invest money, you lend money, you want to lend to the lowest risk at the best rate. And if you can do it to government, then the next guy that comes, stands in line, wants to borrow in the market, he has to pay up above that. So what the government does with its finances is a very important benchmark for the cost of capital in the economy. Monetary policy does play a role on the short end, but totally cost of capital, that's the thing. So there is, I hope my trade-off is clear between sustainability and spending too much.
Thank you, Floris. Well, Salomo, you've obviously alluded to a number of those trade-offs in your presentation. However, in your view, what would you regard as the single most critical trade-off facing the minister?
I think for me really is that policy certainty around the investment, promotion and facilitation bill. If you look at the past 2 to 3 years, we have had a huge influx of FDI, even if it was on the exploration side, which is more capital intensive. The reality is that we are moving to the next phase now. And these sectors need to have some level of certainty around what is local content. We need to have certainty around what subsectors within the oil and gas will accrue to Namibians in relation, and it's notwithstanding perhaps the skills or the lack of skills we don't have in them. But I think it's important that the minister speaks to this. Again, the issue around the petroleum bill, the amendment bill that's coming. Again, you really want to make sure that whatever is done will stand the test of time. It will stand the test of time in the context that what necessitated it to move out of the ministry, and why is it now going somewhere else? Because you want to have that certainty so that you don't have an NIPDB is here today, tomorrow it's gone. We speak about corporate governance in terms of all our economic plans. We go SOE reforms. The next thing, the Ministry of Public Enterprises doesn't exist. What is that? So the reality is, once you've got that policy certainty around your key economic activities, I think everyone signs up. I hear Flores say that you also need not only policy certainty, you also need good policies. But I think even in countries where there's war, there are investors. And the policy certainty there is war. So you need that so that you know which investors are ready to sign up for that. Because in the absence of that, they don't sign up. Thank you, Roshi.
Salomo, I want to remain with you. And again, going back to your presentation, billions are allocated to development, yet execution rates remain weak. Is Namibia's development challenge really about money, or is it about competence?
Yeah, good question. So I think that, and really, and I hope you followed the thought process through the presentation, that our development plans in terms of the narrative don't change, just words change. So let's look at the development budget in its execution. Nekatal Dam is a development budget project, right? You invest, you allocate, you build the dam. The dam is currently at full capacity, but it's not being fully utilized. The green schemes are capital projects. You invest heavily in them, you don't demand a return on that investment. So whether it's competency, whether it's the feasibility that informs the project to be undertaken, and perhaps the research component really of how government goes about arriving at a particular development budget need to be looked at. The national oil storage facility, I think we read the other day that it's being underutilized or it's not having sufficient throughput. Big national project again. So perhaps Honorable Minister of Finance will project pipeline and then allocate feasibility research grants, if it were, to that process so that you don't only build the dam, but you also build the dam with knowing what you want to do with the dam.
So if projects repeatedly fail readiness tests, should Treasury then simply refuse to fund them?
Remember that Treasury approves the funding. So Treasury should do or carry out the due diligence on the approval on the funding. Because remember that the respective ministries present to Treasury what their capital project needs are for the medium term, the next 3 years. And through that, Treasury then is bound to a due diligence in terms of what is the life of the project, how do you intend, what are the potential off-takers, what are the potential costs, when does this project goes into the J-curve, when does the project become, well, where's the equilibrium of this project from a cash flow perspective and. So I think there's more work that needs to be done there to be able to make sure that not only is it not executed, but once it's executed, there's actually an outcome at the end of the day.
So would you, in your view, would you support freezing new capital projects until feasibility and procurement readiness standards are met?
Well, I think Helena spoke about there's a greater risk of freezing due to the challenges that we have. I would rather propose that we do it correctly as opposed to freezing it. And when I say correctly, having the necessary due diligence carried out to the point that a project is not only completed once the dam is physically there, but what is the intention once it's there.
We are told Namibia has savings, yet entrepreneurs struggle for funding. And here, Helena, I want to turn to you. Is the banking sector too risk averse? Or are SMEs simply just not investment ready?
That's also a good question, Michelle. I think it's a bit of both, but I think structurally more the latter. What I mean by that is if you look at or if you remember the GDP graph that Solomon presented, since the period of no growth in 2016, the banking sector has definitely seen a notable increase in NPLs, which are non-performing loans, which have remained sticky, right? So despite the fact that growth has recovered, the banking sector has not seen a material decrease in your default risk. So from that perspective, for them to be risk averse in this economy makes sense from a data perspective, right? On the other hand as well, structurally, again, if you remember Salomon's presentation, you have such a high youth unemployment rate, you have low incomes, and you're sitting in a space where in order for you to be eligible for commercial banking credit, you essentially need some sort of experience or some sort of income to be able to service that debt. But structurally, a lot of Namibians just simply do not have that. And therefore, they essentially are unprepared. And that's why I think what has been the talk of the town for the last couple of years has been, what can we do across the financial sector in the asset management space? Perhaps Namibia needs to create a culture of venture capitalism and etc. that will then allow us to take on the risk of investing in these entrepreneurs without risking the financial stability of the entire financial system, because ultimately at the end of the day, the financial stability is what is driving investment to our country, and it is what is supporting growth at the end of the day. So it is a bit of both, but I do think that government should look at or the ministry should look at, instead of looking at just the commercial banking, which traditionally and by its design is for more mature projects that are already generating some sort of revenue, how can we use the larger savings in order to unlock potential and sort of take on longer term risk and have Namibians sort of invest in themselves in another way?
So bluntly, Helena, is the capital there, but the pipeline weak?
100%. The capital is there. I think if you look at the, as Flores mentioned, the size of the economy, the size of the financial system, and even if you look at, on the asset management side, the fact that we see our largest pension funds investing in infrastructure projects, we just don't see that same investment coming in for a smaller entrepreneur. And even though in the alternative space, as Saloma alluded to the J-curve, their mandates do allow them to take on a little bit more risk in the beginning of the project and allow the entrepreneur to sort of gain that experience and generate that revenue and eventually pay people back or pay the fund back in the long run. So I think the capital is there, but because of the economic challenges that we've been experiencing, there is almost a mismatch in the economy, and that's a structural problem, which is why policy and regulatory reform to me is the answer.
So would tax incentives then for venture capital genuinely unlock investment, or merely subsidize activity that would have happened anyway?
I think to Floris's point about good and bad policies, it's really about the right tax incentives, right? And actually creating an incentive for the private sector to want to do that. Because again, venture capital inherently is very risky capital. So you would have to give me some sort of an incentive to take that on. But again, given the issues that we're having from an unemployment, education, and just where we are from a youth mindset perspective, the culture of entrepreneurship is also just generally not formalized enough. So whatever incentives we try and change or try to implement, it's important that we have some sort of measure to the incentives, so we can always be changing and adopting those incentives. So for example, the tax incentives for internships, how many of the companies have actually taken up those tax incentives, and also how many of those jobs actually then eventually turn into permanent jobs? Because it's a great initiative, but if you're not measuring how many of those jobs actually turn into permanent jobs, and you're not measuring whether the uptake, whether the private sector is actually appetized to take up that incentive, then it is also just essentially a form of fiscal spending that is not generating the ROI that you would want at the end of the day.
Josiah, let me turn to you. Public procurement is one of the largest economic levers available. Should government be willing to pay more in the short term to build domestic manufacturing capacity?
Yeah, thanks for that question, Shay. So I think let's take a seat back and just look at the bigger picture, right? Right now, Namibia is sitting at what, a 37% unemployment rate. When we look at the broader unemployment rate, it sits at 55%. Youth unemployment sits at 44%. And if broad unemployment rate is 55%, just look at the youth broad unemployment rate, probably around more than 60% going to 70%. Not 75%, I think Salome had a slide on that. See, now, given that, right, and then we're talking about, Salomo said 17% of, when we look at our structure of our economy, sits in the secondary sector. Much of it sits in tertiary sector. We talk about manufacturing sitting in that secondary sector. And now we're also saying government doesn't have money, perhaps to put more money into the economy, right? So that they're constrained that way. But one thing is for sure, government will spend, and it'll spend every year, right? So government procurement perhaps is one of those levers that we can use to really help build our economy, all right? So yes, basically that's the answer to your question. We need more local procurement spent by government within the manufacturing sector. Maybe looking at increased preference for local manufacturers. So obviously there has to be reason, right? You can't just have a price 4 or 5 times what you can import. But if you are able to support local manufacturers who will create local jobs, that is one way we can definitely decrease unemployment in the country, especially when you look at the GDP structure in this country, where we look at government spending as one of the largest contributors to GDP. So yes, and obviously then that will then also lead to more consumption within the country, and if you look at the GDP formula. So I think for me, it makes sense that government does that.
Does localization risk entrenching inefficiency and rent seeking?
Again, as I said, there has to be a balance between the two, right? So one cannot pay 4 or 5 times what you can do to, if you can import. But if it's maybe 1.5 times the price of the import price, and perhaps that's a price given our small economy and given the demand and supply considerations in the country. Obviously, if someone is set up manufacturing here, cannot be compared to a manufacturer in China, because Chinese manufacturers have economies of scale. They're able to produce at lower prices than Namibian manufacturers. But if the balance can be found between someone's rent-seeking and someone who's just making a good enough profit, given where they are given the constraints within the economy, then yes, I do believe that government should pay a bit more, but not excessively more.
So what would you say, where does patriotism end and economic distortion begin?
Very good question. Again, as I said, let's let's perhaps do, that's why I talked about that preference margin before. Let's look at a reasonable preference margin, right? Where if a price is maybe, let's say, 30 to 40% more, all right, as compared to an imported price, then we can say, okay, maybe we can procure that. But if you look at, if it's, let's say, it's 60, 70, twice, 3, 4 times than what the import price is, then perhaps that's where you say, no, preparism has to end here and let's be economically rational, because at the end of the day, this is just basically, Namibian entrepreneurs stealing from the pot.
Thank you, Josiah. Flores, I'm going to turn to you. There is capital seeking yield, and there are infrastructure needs. Now, if Namibian PPPs were truly bankable, institutional investors would fund them. So what is really the problem? Is it policy uncertainty? Is it regulatory risk? Or is it political hesitation?
I think we do have a good regulatory framework for PPPs. There's an act, I think 2017 act. And there was a unit created, I think under the Harambee plan, called the Public-Private Partnership Unit, that were supposed to evaluate projects and bring them to the table, so to speak. So I do think we've got the regulations. I do think, though, that we've got the age-old problem of the mandates of capital, right? So we as asset management business, the industry, I should say, basically run the investment plans on the basis of mandates that we get from the members of a fund. So there's always been this problem of a mismatch between the nature of the capital that's available and the mandate it's got, and the demand for capital. I think Helena referred to that as well, the type of capital and venture capital, that type of thing. So I think the developments that we've had with the unlisted investment initiative, where we had a regulation brought in where pension funds had to have a minimum investment in unlisteds, right? And you can actually, there's a band, you can increase your unlisted investments. So now we've got a formal structure where asset management businesses or whomever can register as an unlisted manager and then approach pension funds and say, this is what we do, give us some funds and we'll manage it for you on your behalf. And then they give you the funds with a mandate, what you are to do with the funds. So that makes it, that frees you up in your decision-making process to say, well, I can look at this menu of investments. And I must say, I think we've been really reasonably successful in funding smaller businesses in the unlisted space, right? So the trouble is where we've got now three, thank you, thanks. We've got three streams now converging here. You've got your political developmental imperative. You've got your fiscal policy, and you've got portfolio management as a specialization. You've got to go get these three things running together. So the trouble is, coming back to the Solomon's War analogy, and the policy certainty and good and bad policy and all that. Another problem of the dimension of the way you have got the political stream is it's a short cycle. So there's little continuity, right? So you can add that as another type of policy imperative we need to have is continuity so that plans carry through political cycles so that the investor can also look through the next administration or the next president or the next whomever is coming down the pike. And perhaps we need also to have a regulation to say that pension funds or insurance funds or unit trusts with the right sort of types of mandates are now mandated to invest in infrastructure, right, in PPPs. Now, having this third leg, the portfolio management specialization, infrastructure funding is even more specialized. It's very difficult to make the sums work. And we do not have in Namibia really a culture of user pay. Right, user pay is usually what you need to have when you build a toll road. You know, people need to pay to use the road. People don't want that. That's politically not on here. And that is mostly what you do in PPPs. You have to have a user pay arrangement. Now, there's been some things happening in Namibia that you can maybe throw under the PPP banner. The airports company, perhaps the things that's been done at airports and the concessions on the concession arrangements, the Namport funding for the terminal. Okay, that wasn't private, it was public funding as well as concessional funding. So, but it's combinations of different investors. So that's been happening, and we had this the independent power producers that now all over the place producing green electricity, I should say, as Nampower as the final buyer. So there's a type of a partnership. So things can happen that way, but it's very difficult to get to reconcile these different streams of let's call them, specialization.
So would you commit pension fund capital to large-scale PPP infrastructure under current conditions?
No, not at the moment. For pension fund or investor, it's too illiquid. It's an illiquid investment of a long horizon with big risk. So it needs to be in a pooling, let's call it pension funds pooling together in another fund, perhaps a fund issuing bonds to the market that fund a fund that does this type of investment. That would be, in my view, the best way to go.
Thank you. I just want to pause for a moment and focus on education and human capital, which remains one of the largest areas of expenditure, yet outcomes lag. Helena, if I can turn this question to you, how critical is skills alignment to Namibia's diversification ambitions?
I think it's critical, and it's actually foundational. I think one of the main reasons why Namibia has not been able to properly realize the economic benefit of the relatively stable growth that we have seen compared to the rest of Africa is that partially we don't have the skills to sort of keep the profits and the benefits in Namibia. A lot of times we see that there's foreign leaders or foreign people that are leading and earning getting the higher paid jobs, whereas Namibians are more at the operational level and etc. And something like that essentially means a Namibian does not have the skill to go and start their own firm and start and really, Namibianize certain industries, even if we wanted to. But other than skill, again, it brings me back to my point of regulation, because if you look at something that is less technical and really based off of talent and skill that the government is also looking at investing in for the youth, which is the creative industry, without the right regulations, even if you are as talented as a South African, you do not have access to monetize that talent because regulation prevents you from accessing certain gateways. So it is a combination of both, but for me, I think it's very important that the government or the ministry looks at regulations, and then the private sector looks at how do we develop the skill, develop the entrepreneurial mindset with business development and etc. to really put the two together and then see long-term benefit. But it's not something that you'd be able to necessarily do in the short term. To Salomo's point about long-term budgeting and long-term thinking, we have to take the mindset of maybe 5 to 10-year plans that we're executing, and irrespective of the political administration, there has to be national agendas and national goals that we're able to run towards and achieve and prioritize as a stable part of the budget, because that is the only way you will actually realize the actual return on investment. Otherwise, you do have lost capital.
Salomo, should education funding be tied more explicitly to measurable performance indicators?
Absolutely. To the extent that what graduates, in which disciplines are the graduates coming through? Do we know how many graduates came from UNEM in the economics department? I see that NAST is opening an auctionery now. So the inability to track that critical mass of the skills that sit in these graduates, obviously also it doesn't create the pipeline in terms of throughput for the industries that we have or for the industries that we don't have. I mean, if you look at research, on top of your head, I don't know who in this room can name more than 5 research firms in this country, and anywhere in the world, research is at the cutting edge of new ideas. People don't want to pay for research in Namibia because they feel, we know this stuff ourselves. I mean, what do you want to research? So this is the reality, which takes you back even. You go to the science fields, again, the engineers that we are putting through, given what's happening in Luderitz and all of this. So it's critical to have that filter around who's coming through, where are they, and what could where could they potentially be placed over time? Because in the absence of that, you have this unemployment problem. You can't target it. Your interventions is also very general. And where the world is moving is that you cannot bring solutions through common sense. I mean, there needs to be some level of scientific methodology around solutions because everyone has got common sense and not everyone can solve problems.
Yeah, there's obviously a number of questions, and I mean the discussion can carry on and on, but we would also like to give the floor to our audience for questions. Before I turn to our audience, we also know that Namibia faces rising social welfare demands alongside tax base pressures. Are we politically honest about what we can afford? Is broadening the tax base politically realistic? Or are we approaching the ceiling of tax tolerance? And this is a question open to my panel. Anyone who wants to tackle that one?
What's that last word? Tax tolerance.
Tax
I think the tax burden on individuals in Namibia and companies also is tolerable, but mainly due to the fact that we have such a big SACU income. Now, SACU is tax on economic activity, yes, granted. However, I don't think we feel it so much directly. So, if there a problem develops there in SACU revenue, then we are running into an intolerable situation, because that will no doubt will lead to tax hikes. VAT, income tax, we'll soon get a wealth tax and the estate duties tax and all sorts of taxes, because I think that's one thing that governments do well. So we can talk about development plans failing and all that, but taxing, they're good at that.
Anyone else from the panel want to tackle that one before we open the floor for questions?
I mean, I'll give it a shot. I agree with Flores that definitely SACU revenue, or the sustainability of tax revenue, is really regionally dependent because of the SACU. But if you look at the domestic taxes as well, given the structure, again, going back to the fact that you don't have people creating more jobs to give you more income tax, and you're not seeing necessarily the average Namibian spending more to have more indirect tax, then of course we will get to a point, if we do not fix the structural problems, we will get to a point where we cannot collect more tax revenue. And then that takes you back to Salomo's point in this presentation, where we might end up like our neighbor in South Africa, where we're actually paying out more in grants than we're receiving in tax. And that's, again, why it becomes so important to not look at, what can we do to spend now to make us comfortable, but truly underlying what are the structural issues in our economy, because at the rate that we're going, we will get to a point where we will not be able to collect enough tax to cover our expenses if we do not fix the underlying structural issues of why tax base is not growing fast enough.
Thank you. I'm going to open our floor to questions now, and just a few brief guidelines. Let's please keep our questions concise. Kindly state your name and organization, and direct your question to a specific panelist where possible. We encourage pointed substantive agreement. So do we have any questions? Remember that budgets affect households, it affects businesses, it affects investment, it affects confidence. So yes, let's make this count. I see that we have a hand there at the back. Do I have a roving microphone for the lady at the back? Yes, thank you. Kindly state your name and organization and to whom your question is directed.
Good evening, everyone. My name is Magano. I don't really have a question directed to anybody specifically. I'm a bit nervous, sorry. But I'm going back to the question of youth unemployment. It's just, I'm just wondering, like, if, let me just calm down. I apologize. Okay.
It's okay.
But I saw the graph that Mr. Salomo, I hope I pronounce your name right, shared with us, and it showed that from the ages of 15 to 35, the youth unemployment rate is very high, and then from the ages of 40 upwards, then that's when the graph really looks like it's productive. Now, my question is, how do we, it's just a suggestion, what if we involve everybody? Like, what sense does that make? Like, you see how the nurses, the teachers get to practice what they're learning in class. So you have, when you reach second year, you go out in the real world. But as for an economist or as an accounting student, you wait until third year and then you get exposed to the real world. As a developing country, we want everybody to be involved because we get free education. But what do we give back? the only time we give back, I feel, is when we graduate. So I'm wondering if everybody, like maybe let me say, second year, we all introduce the students to go out in the real world. Because we're already getting free education, we might as well do it for free. We get exposed to everything. You get like maybe second semester, we get a number of people, we take them to the real world, and then we all get exposed. By the time we reach third year, we are all familiar with exactly what we have to do and how it's going to benefit the country. So my question is just, how will that look like if we implement that? Instead of just giving out free education and more graduates. And then by the time somebody graduates, they already know what they're supposed to do, how it's going to benefit the economy, and then we work from there, instead of just waiting for an internship. I don't know.
I think you've partially already answered yourself as well with some great suggestions that you've presented there. Thank you for your contribution. We'll take a few more questions. The gentleman here in the front, and then the gentleman behind him. Front here, in the front, thank you.
Yeah, thank you. Thank you very much. My name is Franz. I think perhaps the question is to Mr. Hay and also Mr. Florence. I hear from you a lot of this aspect of policy certainty. I'm trying to understand, within our regime, is it understandable that we have a shortage of policy certainty? If you can just maybe react to that. Because I don't believe that is the real issue. But then the aspect of understanding all these compound issues that we have, unemployment, inequality. Now, to what extent, if the proposition is this, we have this policy certainty, affect or contribute to this animal that we have in the country. So I'm just trying to understand, how does that fit within the whole trade-off? Because I don't want us, the conversation also to trade off ourselves within the conversation that we are having. So I just want something to react to that. Thank you.
Okay, Frans, at the moment, I think we actually in a twilight zone sort of now, because the policy uncertainty that we refer to, one is specifically to do with the oil and gas opportunity that's out there. And there are legal reviews and things going on about how to manage this new opportunity. And people are taking too long to make their minds up on the Petroleum Act that Salomo referred to. And they want to put in too many requirements and provisions, and you must do this and that and this and that before you are allowed to drill for oil. And by the time you've done this and that and this and that, it's uneconomical. So that's just one sort of piece of the puzzle. But there are other, let's call it legislative issues that are unresolved, like the Investment Promotion Act. That's a critical one, because it's a bad piece of legislation, and it's very disjointed. It's just like it was quickly thrown together overnight someplace. And there's an agenda behind that I do not trust. It comes from some dark corner, if I may be so blunt. Then you've got the NEP, the new economic empowerment, black empowerment legislation that's been hanging now for how long? It's not finalized. There's the FIM Act. The FIM Act is the Financial Institution Act. That's now sort of implemented, but we're waiting for regulations of how it's going to work and all that sort of thing. So it's at the moment. Then we also have the new administration have restructured all the ministries. They reshuffled, restructured from 21 to 14, right? So it's been broken apart and put together again. And there's been huge reshuffling in the SOEs of the personnel there. You follow? So it's just at this point in time, there's a lot of balls in the air that we don't know where they're going to land. But you are right in the sense that I don't know how Namibia actually survived the last 35 years with the types of structural problems we've had. And here's a thought, the development plans, I think I agree with Solomon, it's more or less the same story over and over. I think it's time to evaluate the results. What was the results we've been getting? Yes, no, good, maybe. Shall we stop doing this or shall we do more? Or, it's like,
Thank you, Flores. Solomon, would you like to briefly respond to that?
Thank you, Roche. Yeah, thank you, Franz. I think mine is really around a decision being made. I mean, I'm not an expert like Flores around legislation, whether this one is good or whether this one is bad. Essentially, what I want is we cannot have a legislation that doesn't come. So is it NIEF or is there no NIEF? Right? It's as simple as that. Take the thing off the table or put it on. And I'll give you an example of the visa regime, right? This visa regime, when you want to travel to Schengen, to the Schengen area, you go sit, I don't know, I haven't traveled in a while, but the last time I went, I had to make an appointment at the German embassy for 3 weeks. You come after 3 weeks, you get your appointment, your bank statement is not correct. Go back, go work another 3 months, come back, your bank statement is fine, now you can travel, right? You want to travel to the Schengen area and you want to travel to Germany. So what do? You fix that. The Namibian visa regime was introduced. Everyone kicked and shouted about this visa regime. If you want to come to safari in Namibia, you will align to that visa regime. So for me, this is what we need to move towards. Make a decision. Because if you don't make that decision, I think Florence and everyone else is more worried to the extent that if you are in grade 12 today or grade 1, you hope to get to grade 2 because that's progression. That's a certainty that you want. So and in the absence of that, we'll just remain, it's bad, don't do that. There's a dog behind the tree in the dark corner, someone else is doing what. So it will continue like that. Make the decision and let's live with it, And I think decisions around policy, if they are informed, for instance, I don't know. I mean, sorry, Rochelle, maybe I'm taking a bit of time, but I think let me make this point. You've got what they refer to as the EPLs, right? The exclusive prospecting licenses. We have a template where government and the private sector came together and did very well with De Beer, right? Because they built a world-class institution. Deb Marine localized, they are run by Namibians, and. So that's a template where there's a proper shareholding between private sector and government. I don't know what the issue is. And if you are saying you are putting in 23% for Namibia, why are you putting it in there? You need to explain that. Are you putting it in there because you saw what happened with Deb Marine and De Beer, or are you putting it in there because it must only come to Salomo? But in the absence of that, we're all guessing. And this is why Flores is saying that people are doing things in the dark corners because there's simply no decision coming. Bring the decision and people will align with it.
Thank you. In the
Members
interest
of
of...
the I withdraw that statement.
It's too late now, Flores. In the interest of time, sure, I see 4 more hands. Again, we kindly request, keep your question concise. Please introduce yourself by way of your name and the organization you represent and who your question is directed at. I remember we had a gentleman at the back there. Yes, sir. We'll take 3 more questions and then we'll conclude our discussion. We've got quite a number of hands. It seems like we all have time still. I just want to ensure that we're still good with time. Okay. Can we have your question very briefly?
Okay. Good evening. My name is Vitalio Angula. I'm a freelance journalist, but I'm here in my capacity as a philosopher. I've got a question on education for Mr. Solomon Hay on education not returning value for money. So my question is, how are you calculating value for money? And does education not return value for money, or are you making the mistake of looking at value for money through the lens of short-term government budgets? I would just like to say that in the long term, money spent on education leads to higher lifetime earnings, which result in more tax revenue in the future. It also contributes to lower crime rate, which also contributes to lower justice costs and also better health, meaning lower healthcare spending. For example, the majority of people today who find ourselves in the prison system are people who do not even have a grade 8 high school education. So that trade-off of the investment in our education system, does it not pay off socially? When you look at health education, something as simple as using a condom or birth control requires a degree of education to understand. So we need to incorporate social return on investment when talking about return on investment. Just a bit of advice. The education ecosystem also drives the economy in ways that are not always measurable. For example, the transport for children to go to school in the morning, the taxis, the staffing requirements for the education system, the teachers, the cleaners, the infrastructure development for the construction industry, uniform manufacturing, catering for school hostels. These are all economies which benefit from having an education system which we invest in heavily.
Do you have your final question, sir? We're just trying to accommodate us.
Okay, let me finish. So I wanted you to answer the question of what are the productive gains of a well-funded education sector. In terms of our budget, how does it look like when it comes to the taxes on when it comes to fuel prices, and also what can we expect in terms of taxes on alcohol and tobacco products? Okay, for giving, let me just give other people a chance. This one I'll ask later.
Thank you so much. Shall we take 2 more questions and then we will return to our panelists to address those. Okay, you've got the microphone.
Yes. Sorry, good evening. My name is Aina and my question is for Flores. So you spoke about unlisted investments, right, with pension funds. So now I think it goes back to what Josiah said earlier, that in Namibia, your biggest employer is the government, right? So which means JPF is your biggest pension fund that you have in the country. Now, over the years, we have really seen the investment of JPF back in the Namibian market. And we have seen that they sponsor a lot of like things in Namibia, like I think the Osona is one of them and all those type of things. Now, we don't really have the necessary skills to actually, how do we measure? Because we don't really have the people with the necessary skills to measure how much of this unlisted are we bringing back to JPF, right? And how does this investment of JPF, because it feels like like it's either the government that sponsors or it's GIPF that gives the capital. How does that help the economic direction of the country? And is that the correct direction to go?
The gentleman, thank you so much. Yeah.
Good evening. My name is David. I'm from the Business Association. Briefly, my question goes to our elder, Mr. Flores. If you were the Minister of Finance, sorry to put you on the spot, my elder, which economic direction or which sector will you put much of your budget on, and what will be the expected outcome on that? Just your view or your wisdom on that. Thank you.
I think, would you, Salamo, can we go back to that question, the first one, and then we'll tackle the last two for you, Flores. And then we'll take two final questions from the floor. Salamo.
Okay. Thank you, Roche. I think Mahano spoke about the youth unemployment and the attachments. I think she answered her own question. It's really to link the pipeline to the production base. And I think Vitalo, the freelance philosopher. So we did the numbers on education. We looked at the number of people that start at grade 1. And if you have 60,000 young people starting grade 1 in a specific year, you only have around less than 10,000 that actually make it out of grade 12. That was 2 years ago that we did that study. So surely the long-term investment there does not carry any sort of lens that I'm looking at it. I think it's straightforward for everyone to see that somewhere along the line, young people are falling through the cracks. They're simply not making it. The biggest dropout is around the grade 8 and grade 10. And that's the reality. So surely there's no productive gain if you are losing so many young people during that stage. We can go further. Again, you saw the slide where the greatest concentration of unemployment lies, and 9 out of 10 graduates are essentially young people. So to that extent we have spent so much on education, and even if we improve that number from the 60,000 that starts grade 1, taking them into grade 12, that would be a productive gain. And the other one was, Roche, I think this is it. David asked about, I know GIPF, again, Flores, to your point that we shouldn't rely on government to solve all our problems. Perhaps you are right in that respect. But the reality is that in the Namibian economy, where government is prevalent and where there's government support, whether it's GIPF, social security, there is some level of progress. So you need that support in one way or the other. And especially for a developing economy, you need to have government create that environment to have the private sector, the fund managers, managing mandates out of GIPF because of this big pool of assets that sits in there. I think those were really the questions that...
Thank you, Salamo. Flores, can we move over to you?
Can I add to that unlisted question of Ainu? If I speak from our own book as Capricorn Asset Management, we are running an unlisted fund without any GIPF money in it. So I don't know if it's a two-edged sword, whether you actually want it or not, but we are cutting our teeth on it, and I think we're doing quite well. It is a debt fund. So we lend money. So we do not take equity stakes. There are other unlisted managers that does that. And yes, I think GIPF is probably now approaching close to 200 billion in assets. They're very close. Yeah, they are a huge player. And I think some of the structure we have currently in place in the unlisted environment was due to GIPF's boo-boos in the past, where they made mistakes, lost money, you know, all that. So it was brought more formally, regulations, formal, you register, do it proper. So it works, it's working. But I'm not big enough, but it's getting there. The other question was that if I was the minister, oh my goodness. He is like, I think we must rather conclude the evening, then I'll start. No, I will just continue to say no. What I will focus on, if I have to pick one sector, is agriculture. Agriculture is where the people, most of our people are employed, semi-employed, I would say, employed, commercial, subsistence. I think it's been said that up to 70% of our people are dependent on agriculture. So that is where you can make the biggest difference, the quickest in the quality of lives of people on the ground if you do that proper.
Thank you, Flores. We'll take one final question from the floor. We've got a question here in front. If we can just have the microphone.
Yeah. Thank you, Gideon Shilongo, ONL Group. I have 3 quick questions. One is to Mr. Hay. When you talk about inclusive growth, some people can have many interpretations. They can understand it differently. Maybe you need to just elaborate more, and especially explaining the growth which is not inclusive and the one which is inclusive, so that it's clear to the layperson. 2, is now not the time where government should not look at where to spend the money, but should decide where not to spend the money? 3, Namibia is asset rich, but maintenance poor. So and you mentioned the example of Nekatal Dam, new capital project, and every year we have Von Bach here, which we almost ran out of water. We went to invest that side, and that water is not utilized, and we could have deployed maybe that capital much better close here. So I'm not sure whether I remember correctly, but I think I heard about the aspirations to build either 2 or 3 new big hospitals by the current administration. But we sit with big hospitals which requires good maintenance. So should we not park some of these capital expenditures and focus on doing proper maintenance for the assets which we have and we have neglected over time? Thank you.
Thank you, Mr. Shilongo. I think I agree with you on the asset-rich component. Even if you look at our CBD, I always make the point that where cities, when cities thrive, their CBD is functioning. And that's a maintenance issue. We have neglected that component of maintenance. We tend to want new. On your way to Hobabas, there's a small town, a small village called Vetvlei. There used to be an abattoir that was certified to export meat into the EU. It's decaying right in front of our eyes. If you go past there, you see baboons in there. They have established, I think, a coal factory next to it. So think about the health and safety issues around that abattoir. So those are low-hanging fruits that we can try and address to be able to create the jobs around the new Minister of Finance for Agriculture that he spoke about. So those are, in fact, real tangible sort of assets that we can look at. Again, the cons, maybe as part of the conversation, the maintenance around our asset base. I think the Ministry of Works was very stern was it last week, around the government properties where people stay for free, precisely because he wants to make sure that there's that return. In respect of inclusive growth, now, GDP is measured on economic actors, those that are participating in the economy. So those that are, in a sense, meaningfully employed, if it were. And that's how it's measured. So when you measure that growth, and if the majority of those people in the economy are smaller than those outside of the economy that you are measuring, it means that the growth that you are measuring is not inclusive. What is it that we need to do? If you look at the structure of the economy, I spoke about it, that it has not changed if you look at it from the 1980s to what it looked like now. Our secondary sector, and I think Helena or Josiah spoke to this as well, is where jobs would be created. This is where value addition should take place. Again, to your point on maintenance, you produce with the green schemes this number of carrots for the market, where the carrots then is flooded in the market, for lack of a better word. What do you do next? Because that's a primary product. You bring it into the secondary sector, which means that you start adding value. You make carrot juice, you make carrot cake, you make carrot jam. That's secondary sector. And this is where the jobs would be created. Is that carrot jam?
Just saying, Salomo, it's the first time we hear of carrot jam. But
okay. Apricot jam. But nevertheless, so essentially, this is how then the growth become inclusive, because you would have to employ more people that are standing on that assembly line to peel the carrot so that the carrot is clean, to wash it so that it can be graded, so that it turn into juice. So that becomes a value chain, and that's then you will be able to employ. And I think the majority of people that heard me speak over the years that we've been doing this work that we are doing, I tend to think that I always say the same things, and I don't change the audience. You know, I say this even when the president is in the room. You know, so the reality is that I don't know why the message doesn't land, because some of this really is low-hanging fruits. You know, we don't have to become highly complex with the job creation initiatives. And agriculture is there. We've got water. I don't know who owns the land next to Nekatal Dam. We have seen the success of the grape story down south in Ausenke. They're exporting huge tonnage of grapes into the UK. You go there, for you guys that get the Schengen visas, go to London. You go to London, you see Namibian grapes in London because it's highly sought after products. What is the point? Why don't we replicate that into the other sides to create those jobs? So that's what inclusive growth would entail. I think there was a question around, is it time for government to decide what not to spend on or what to spend on? I think it's time for government to put skin in the game in terms of prioritizing this policy certainty. If they're going to transform, let's transform. If we're going to focus on agriculture, let's have that value chain fully optimized. Let's build those incentives. Do we understand the price variations in terms of the export market and the domestic demand? So that you've got a clear understanding of what it is that you want to see at the end of the day. In the absence of that, we'll just say from economic progression, advancement, transformation, and.
Thank you, Salomo. Thank you to our audience as well. In conclusion, I'd like to ask my panelists, if the minister were to be seated here tonight, what is the one hard decision you would urge her not to avoid? Josiah, I think you've still got voice left.
So the question is,
So if the minister was here tonight, what is the one hard decision you would urge her not to avoid?
Yeah, that's a difficult one. But I think, look, where we are right now in this country, I think what we need to do is not perhaps more policy. What we need to do is implementation, all right? So what we need to do is really, perhaps the hard decision is to hold to account the officials that are responsible for implementation in this country. Because I believe we have some of the best policy in Africa, but our issue is implementation. So let's get that right. If we need to perhaps, the public sector is anyway bloated, right? If we have to fire a few people, let's do that to get it right, and perhaps spark some fear in people to get it right. Because I think that's just, to me, the most, that's one thing that perhaps she should fear not doing if she has the power that is to do so.
Josiah says implementation. Helena?
I agree with Josiah, and I would say implementation, but also not being afraid to say no to operational expenditure that is unnecessary, because sometimes, to Josiah's point, it's not that we need more money, we just need to use what we have more efficiently. So holding people accountable to that and simply saying we're not going to allocate this because we do need to spend a little bit on the development and we have to make do with what we have, even though it might upset some people. I think it is important to manage the operational side, and even if it means a little bit not necessarily going through with all of the jobs that they wanted to initially hire now today, it does mean that in a few years you'll be in a much better position to hire more people for a much longer time and at a much higher income.
Flores, you've been asked what if you were to be minister, but we'll let you off the hook on that one for now. If the minister had to be present, what would you say to her?
I would wish, what do you say, Honorable Minister? I would just say, Honorable Minister, I wish you all the best and good luck.
Plain and simple, as easy as that. Salomo?
So the budget is a budget policy statement, right? And I'll come back to it. I think we have to transform the economy, ladies and gentlemen. That's the one thing we have to do. And with transformation comes hard decisions. And I think if there's one thing that we have learned from the current president is that she makes decisions, right? Whether we are happy with that or not, it's something else. And I hope that if I could speak to Madam Honorable Shafuda, I would ask her that please make a decision on this policy around investment and promotion so that everyone knows what they are signing up for, so that Namibians knows but 20% in oil is secured or it's not secured.
Thank you so much. Thank you, thank you, thank you. Well, ladies and gentlemen, budgets are not merely financial statements. They are instruments of direction. The choices made in the coming weeks will shape Namibia's growth trajectory, its fiscal sustainability, and its developmental credibility. I'd like to take this opportunity on behalf of the Economic Association of Namibia and thank our panelists for their insight, candor, and expertise shared with us this evening, and of course our audience for your engagement. Let's please give a warm applause for our panelists. Thank you. You're welcome to... Sorry, there's a group photo that's requested. If you can just, Floris, not so quick, not so fast. So, ladies and gentlemen, as we conclude, we are reminded that dialogue must ultimately inform decision-making. To deliver the closing remarks this evening, it is now my honor to invite the Chief Executive Officer of Capricorn Group, Mr. David Nyoma, to please join us. Mr. Nyoma, the floor is yours.
Thank you very much, Roche. And my first thanks is to you all gathered here this late evening, or should early evening, late in the day. You know, you have sacrificed your relaxation at home or elsewhere. You could have had a real good time. I would like to say the issue of budget, the issue of national development, it seems to be very tough. There was a time when many years ago, I joined government at its early stage, 1990, in the formation of some of the structures. I was full of energy, and I used to think that in 5 years' time, we'll have full employment. We worked till late evenings. I can tell you it's not that easy. And I would like to thank here our panelists. Let me start with Helena Mboti. In fact, I was feeling a bit awkward that you are the only lady on the panel, on the sideline, augmented by Roche being the moderator. I can say that I've seen you doing this for the past few years, and I can only smile and say, yeah, you are up there now. Yesaya Nopoju Hano Oshike, man of many hats. Yesaya is very able to do so many things. I don't know which is his office. And thanks for your contribution and your insight. I'm sure you had a role to play in the paper that was drafted and sent to the Honorable Minister as input into the budget. And Honorable Solomon Hay, he knows why. Future. Yeah, the future is waiting. And thanks very much for that overview, brilliant. And you know, I have the fortune of having seen so many and I seen your earlier presentation, and I see this one, and I say, yo, it's getting better all the time. And my dear brother Florence, and thanks that you provided that experienced voice on these matters that we are discussing. It's complex. If I tell you a story, I have many, many stories. I'll tell you one small one that is with regard to what we are talking about here to move the country forward. That's really what it is. And in doing so, we have to put the resources on the table. Many years ago, it's almost 30 years ago, I was in South Korea. I befriended an old man who was the first PhD holder, economics, in South Korea, Dr. Park. That was his name. He told me something that many of the things that make South Korea tick are not written because they were not conventional, they were not popular, they rather not be said. And one of them was that when General Park, the president, took over, he had one singular aim, is to transform the economy and the betterment of the people of South Korea. But sacrifices had to be done. And one of them was with policy, and that we have good policies, I've seen them, well researched, we had all the experts in the world here. We have one thing that we don't do is execution. General Park had a solution to it. He appointed a few able, what he called bulldozers. They, on behalf of the president, will go around, and if they turn up at anybody's office, they did not discriminate whether you are private sector or not. Some of us, we run big companies. Because General Park, in his view, if you run a big company, you have an impact on the national economy. So you are his business. That bulldozer turn up at your place. A lot of these ministers, executives would rather jump through the window rather than face that bulldozer. Because the consequences of being confronted by the bulldozer, but sometimes he comes to congratulate you, but you already start thinking, what is it that I've not done well? So, but it made Korea run. And today, I think it's the 6th biggest economy in the world, if I'm not mistaken. So what I'm saying, we need to have execution. We can say so many things, budget after budget, policy after policy. If we don't execute, forget. Start somewhere and get it going. So that's my little sense, and I would like to really thank our sponsors, Hanns Seidel Foundation. You have always been with the Economic, what is it? Association. I'm trying to see the other sponsors. Of course, Capricorn Group, that's a place to be. You have always done well. Keep on doing it. Network Media Holdings, thanks for joining the club. Let's do it next year again. And who else have I left out? Of course, Economic Association of Namibia. You don't need to be mentioned. You are our host here. High Economic Intelligence, yours truly. Indeed. Keep doing the work that you so fantastically do with passion. And I must say, Roger, your moderation is should I say, world class. It's really fantastic. I remember Roger interviewing me, was it 95 or 96, 95. I used to do a program on motivating small businesses. And her interviews were very interesting. I don't know whether I was answering questions correctly or I was totally distracted. Rose used to be the runner-up to Miss Namibia. Sorry, I had to tell you this. You can now imagine sitting in close range, and she's asking me same way she's asking, very pointed questions, and I'm looking around at her, and then I answer anything. Well done, Rocher. At least today you didn't ask me anything. So colleagues, thank you so much, and I look forward that next year again. Of course, we have to innovate and see how else we do it differently. Let's keep on debating. Let's keep on saying what we have to say. That is the freedom we have in this country and the beauty we have. Truly, believe me, somewhere the minister's ear is here, one way or the other. And we'll see her answering this when she presents the budget. Thank you so much, colleagues.
Thank you so much, Mr. Nyoma, for those insightful closing reflections. And one thing I have to say, it's always such a pleasure. Like you rightly said, you always have a story to tell. So I've accumulated a lot of your stories over the years. Thank you, Mr. Nyoma, for gracing us with your presence here this evening as well. Once again, ladies and gentlemen, on behalf of the Economic Association of Namibia, thank you for your presence, for your engagement, and for your seriousness about a very serious matter. To our online community, we would also like to thank you for having joined us. Economic direction is not shaped by silence. It is shaped by informed debate, by evidence, by accountability, and by courage. May tonight's discussion contribute meaningfully to the choices that lie ahead. From myself, Rochelle Locke, once again, thank you for your time, and we'll see you around. Thank you.
Welcome to the Business 7 Show, Namibia's primary economic analysis program. My name is Hannes, and we bring you in-depth news covering the main aspects of Namibia's economy, plus interviews of key economic individuals that make the key policy decisions that shape our nation's future. Join us on Business 7 every week as we unpack what is important to our nation and what drives its economy.